Hello, everyone, and welcome back to ninza.co. We hope you're having a productive and inspiring trading day. Today, let's jump into our main topic, order flow. Many of you are already familiar with it. Order flow charts offer an incredible amount of valuable information. But with so much data on the screen, a common question arises. How do we actually find reliable entry signals amidst all that complexity? That challenge is exactly why we created Romantic Pulse, a powerful indicator designed to deliver clear and actionable trade signals based on both order flow and price action. One of the standout features of this indicator is that, for the very first time, it can utilize volume data without requiring tick replay. This breakthrough allows the indicator to load onto your chart almost instantly, giving you a smoother, faster, and more efficient trading experience. Here's how the indicator works on your chart. It rapidly analyzes the order flow of each candle together with the surrounding price action. This ultra-fast processing allows it to detect the exact moment a trade signal begins to form, giving you timely and reliable insights. And to help you understand this indicator even better, let's dive into how its signal generation mechanism works. Let's start with the sell signal. At this stage, the indicator evaluates 5 different factors simultaneously to generate a reliable trading signal. First, the indicator checks whether the candle has triggered a liquidity sweep. So, how does the indicator detect a liquidity sweep? For a sell signal, the indicator begins by comparing the high prices of 2 consecutive candles. The previous candle must be a bullish candle, while the current candle should be bearish, with a high that exceeds the high of the earlier bullish candle. This pattern indicates a potential liquidity sweep occurring above the prior price structure. Next, the indicator evaluates the close price. The bearish candle must close lower than the close of the preceding bullish candle. Once this condition is met, the liquidity sweep is considered confirmed and complete. We apply this mechanism because when traders try to catch a market top after a strong upward move, they often place their stop-loss orders just above the previous bullish candles. This behavior is especially common among scalpers. When a cluster of stop-losses builds up in this area, the market only needs to push slightly higher to sweep out the liquidity from these weaker buy positions. Once that liquidity has been taken, the temporary supply is essentially cleared out, giving the market room to drop more decisively. At this moment, liquidity becomes available and a high-quality sell signal can naturally begin to form. In another scenario, when traders chase the price by buying right after a bullish candle, this detection mechanism allows us to clearly see that the buyers have failed. Their aggressive buying turns into liquidity for the sellers. And once that liquidity is absorbed, the buyers become exhausted and can no longer push the market higher. Next, still within the first step, the indicator also identifies the delta reversal that occurs between the candles. We use the candle's body to represent its delta volume. The body of the candle is always treated as 100% of the total volume for that candle. The delta levels are displayed visually right on each individual candle. For a bullish candle, the shaded area inside represents its positive delta. This tells us that the buying pressure within that candle is stronger than the selling pressure. Similarly, on a pink candle, the shaded pink area represents the candle's negative delta. With this visual approach, we can clearly identify when a shift in delta occurs between 2 consecutive candles. Next, the indicator identifies what we call the order acceptance box. In simple terms, this is the price zone within a candle where the highest concentration of trades occurs. Once detected, the indicator highlights this area as a clear visual box directly on the candle. Here, you can see a bearish candle with its order acceptance box positioned near the lower part of the candle. That's exactly what we want to identify. Instead of just marking the acceptance zone in a standard way, the indicator applies an additional requirement. For a valid sell signal, the order acceptance box must appear in the lower portion of the candle. This tells us that traders are willing to accept trades at lower prices, signaling increasing selling pressure and a higher likelihood that the market will continue to move downward. While detecting the order acceptance box, the indicator also requires that the POC must fall inside this box for the candle to be considered a valid signal. This condition confirms that the order acceptance box is meaningful, as it includes the POC, the point where the highest trading volume occurred within that candle. In the next step, the indicator compares the buy and sell volumes within the signal candle itself. To do this, it uses a predefined threshold to determine whether selling pressure outweighs buying pressure. At the moment, that threshold is based on the volume inside the order acceptance box. This ensures that the comparison reflects the core price action, the zone where the market is truly concentrating its trades. Here you can see the selling volume represented by the purple histogram bars. The buying volume is displayed through the blue histogram bars. By looking at the colors, you can clearly see that the purple histogram bars appear more frequently than the blue ones. This tells us that selling pressure is dominating the buying pressure within the order acceptance box. In the final step, the indicator compares the volume of two consecutive candles. If the signal sell candle has a higher volume than the previous bullish candle, the sell signal is immediately suggested and displayed on the chart. Similarly, for a buy signal, we also need to identify the liquidity sweep factor. For a buy signal, the logic works a little differently. The indicator examines the low of the previous bearish candle and compares it with the low of the current bullish candle. For a valid buy signal, the bullish candle must have a low that dips below the low of the prior bearish candle. This pattern suggests that a liquidity sweep may have occurred beneath the price structure. Next, the current bullish candle must close higher than the close of the previous bearish candle. Once this condition is met, the liquidity sweep to the downside is considered complete. Similarly, we apply this mechanism because when traders try to catch the bottom after a strong downward move, they often place their stop orders just below the previous bearish candles. This behavior is especially common among scalpers. When a large cluster of stop losses builds up at the bottom, the market only needs to push slightly lower to sweep out the liquidity from these weaker sell positions. Once this liquidity is absorbed, the temporary supply is cleared, giving the market room to bounce back with much greater strength. At that moment, the market becomes rich in liquidity for the buyers, creating the perfect conditions for a high-quality buy signal to form. In another scenario, when traders chase the move by selling after a bearish candle, this mechanism reveals that the selling side is losing strength. They keep selling aggressively, but in doing so, they unintentionally provide liquidity for the buyers. Once this stream of sell orders is fully absorbed, the sellers become exhausted and no longer have enough power to push the market any lower. This is the moment when buyers can regain control of the market, paving the way for a strong and reliable buy signal. Similarly, still within the first step, you can see a bearish candle where the body acts like a visual scale. Inside the candle, the pink shaded area represents the negative delta, clearly showing the selling pressure occurring within that candle. Similarly, still within the first step, you can see a bearish candle where the body acts like a visual scale. Inside the candle, the pink shaded area represents the negative delta, clearly showing the selling pressure occurring within that candle. Next, in step 2, the indicator analyzes and identifies the order acceptance box. As you know, this is the price zone where the highest concentration of trading volume occurs within a single candle. For a bullish candle, the ideal order acceptance box should appear near the upper portion of the candle. This indicates that traders are willing to pay higher prices to buy rather than hesitating and waiting for lower levels. It's a clear sign of price acceptance and strong buying pressure. In this next step, the position of the POC, point of control, plays a crucial role in confirming the strength of a buy signal. For a bullish signal candle, the ideal scenario is for the POC to appear near the upper portion of the candle. This not only indicates that the highest trading volume occurred at higher prices, but also shows that buyers were willing to accept and trade at premium levels. A behavior typically seen when the buying side truly believes in the strength of the upward move. In the next step, the indicator compares the sell and buy volumes within the signal candle itself. Just like before, the purple histogram bars represent the sell volume, while the blue bars indicate the buy volume taking place inside that same candle. The indicator then defines a specific analysis zone to determine whether the buying volume exceeds the selling volume at that key level. If the buyers dominate within this crucial region, it becomes a strong supporting factor that reinforces the reliability of the buy signal. Finally, the indicator compares the total volume of the signal candle with the volume of the previous candle. If the signal candle shows higher overall volume, it indicates increasing buying pressure. When this condition is met, a buy signal is triggered and displayed on the chart. Next, let's move on to the parameter section of the indicator so we can better understand its key settings and how each one affects its behavior. First, we have the volume filter, min delta diff parameter. This setting determines the minimum volume difference required between two consecutive candles. In other words, the current candle must reach a certain percentage of the previous candle's volume for the signal to be considered valid. To illustrate this more clearly, you can see that we have set volume filter, min delta diff equal 100 Rs. This means the signal candle must have a volume that is at least 100% greater than the volume of the previous candle. In this example, the signal candle has a volume of 95, while the previous candle has a volume of 43. This shows that the signal candle's volume is more than 100% higher than the preceding candle, making it a valid and qualified signal under this parameter. Next, we have the threshold, POC, or percent parameter. This setting defines where the POC must appear within the signal candle. In other words, it specifies the percentage range of the candle's height in which the POC needs to be located for the signal to be considered valid. In this example, the threshold POC percent parameter is set to 40%. So the entire candle is considered 100% in height, measured from the high down to the low. At this stage, the indicator calculates the 40% threshold starting from the candle's high and measuring downward on a bullish candle. This means the POC must fall within the upper 40% zone of the candle's total height. This requirement ensures that the highest trading activity, represented by the POC, occurs near the top of the candle. It's a strong sign that the market is comfortable accepting higher prices, indicating solid buying interest and strong bullish sentiment. Next, we have the threshold volume parameter. This setting defines the volume concentration threshold within the signal candle. In other words, it specifies where the order acceptance box should appear. This parameter determines the percentage zone of the candle where volume must be dominant for it to be considered valid. Once the volume concentration meets this threshold, the order acceptance box is created, highlighting the price area where the market shows the strongest acceptance and trading activity. Let's say we set the threshold volume parameter to 50%. This means that for a buy signal, the trading volume within the upper 50% of the candle must be greater than the volume within the lower 50%. In other words, the top half of the candle needs to show stronger volume concentration. When this condition is met, it indicates that buying activity is dominant at higher price levels, an important confirmation that strengthens the validity of the buy signal. Next, we have the threshold buy-sell percentage parameter. This setting defines a specific percentage range within the signal candle. Based on this range, the indicator selects a particular price zone and calculates the total buy and sell volume inside that zone to verify whether the signal meets the required conditions. This ensures that either buying or selling pressure clearly dominates within the most meaningful part of the candle before the signal is validated. If we set this parameter to 50%, then for a buy signal, the upper 50% area of the signal candle must show greater buy volume than sell volume. This ensures that buying pressure dominates within the candle's most important price zone. It's important to note that threshold, buy-sell percent, should ideally match threshold, volume percent. This alignment allows the indicator to analyze buy and sell volume directly within the order acceptance box, ensuring that each signal is validated using the most precise and meaningful volume data. Next, let's take a look at a highly effective strategy that combines romantic pulse with additional tools to maximize the power of a trading signal indicator. This strategy includes the combination of romantic pulse, imbalance volume sensor, impulse, and MACD Pro. The goal of this setup is to help you capture signals at the very beginning of a new uptrend or downtrend, right when momentum is strongest. Even better, it ensures that you never miss an opportunity, making it a perfect strategy for scalpers who rely on speed, precision, and rapid market reaction. First, we'll add romantic pulse to the chart. Then, we'll configure the parameters and signals according to the recommended settings, ensuring that you get the clearest and most effective view when analyzing and executing your trades. Next, we'll move on to the imbalance volume sensor. Add it to your chart, then adjust the parameters as shown so you can get the most accurate and effective readings from this indicator. Next, we'll add Impulse MACD Pro to the chart. For this setup, we will turn off all the signal outputs of the indicator because all we need to focus on are the histogram bars, which help us assess the market's momentum. This step is essential for identifying when momentum is strengthening or fading, allowing you to make more precise and confident trading decisions. Now let's move on to how to trade with this strategy, and you'll see just how simple and intuitive it really is. First, take a look at the imbalance volume sensor ribbon. If the ribbon is showing an uptrend, it means the market is currently in a bullish phase. Next, check the Impulse MACD Pro. If you see green histogram bars, this indicates that bullish momentum is strong and the upward trend is showing solid stability. When both conditions align, an uptrend ribbon and strong bullish momentum on the MACD histogram, you have a highly favorable environment for seeking buy opportunities with strong reliability. At this point, you'll begin to notice the first buy signals emerging as the uptrend develops in a strong momentum environment. And these signals come from romantic pulse. This indicator allows us to catch signals right at the short swing points, where the market is just beginning to move. Because romantic pulse identifies early stage signals, it gives us beautiful entry positions at the very beginning of a new trend, maximizing potential profit while keeping risk low. As price continues to move, you'll notice that multiple buy opportunities appear throughout the uptrend, generated by both imbalance volume sensor and romantic pulse. However, keep in mind that this doesn't mean we should enter every single signal. The abundance of signals is not for rapid-fire trading, but rather to give us additional chances in case we missed earlier entries or if the market conditions weren't ideal at the time. This approach makes the strategy flexible and trader-friendly, allowing you to select only the most optimal entry points throughout the entire upward move. On the other hand, to enter sell trades, we need to wait for the imbalance volume sensor ribbon to shift to pink, indicating that a downtrend is taking shape. At the same time, pink and red histogram bars on the Impulse MACD Pro confirm that bearish momentum is strong, showing clear dominance from the sellers. When both of these conditions align, sets the stage for high-quality sell opportunities. Next, you'll notice that the first signals appearing at the start of a new downtrend often come from romantic pulse. This gives us a strong entry position, as the early signal allows us to catch the trend right from the beginning, before the market makes its larger moves. And throughout the entire downward movement, we will continue to receive additional trade signals from both imbalance volume sensor and romantic pulse. These signals provide more opportunities to engage with the trend while also reinforcing the strength of the sellers at each stage of the decline. Within this strategy, imbalance volume sensor and romantic pulse complement each other seamlessly, They take turns capturing the earliest signals at the very beginning of a trend, allowing us to detect shifts in order flow right when the market starts gaining momentum. In particular, Romantic Pulse demonstrates exceptional sensitivity in identifying micro swing points, the kind of early inflection zones that pro traders love to exploit for premium entry positions before the major move unfolds. In other words, even if you miss one setup, the next one is never far behind, all supported by a consistent, flow-based logic that reflects the true behavior of market participants. Another powerful tip for filtering high-quality signals is to watch for overlap signals between imbalanced volume sensor and Romantic Pulse. When both indicators trigger at the same location, it often means price has tapped into an imbalance zone and is reacting in a way that aligns perfectly with the intended direction of that zone. Imbalance volume sensor highlights where the market previously lost balance, and when price revisits these areas, smart money often steps back in. If Romantic Pulse fires at the same moment, it confirms that order flow and momentum are stepping in strongly, a sign that buyers or sellers are reclaiming control right at a critical level. This alignment makes overlap signals far more reliable, giving traders cleaner entries, stronger momentum confirmation, and higher probability setups. Exactly what professional scalpers and trend traders look for. Join the HelloWin Forum, where ninZaFamily traders come together to explore valuable trading knowledge and products. Click the link in the description to get started. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.